The price of Bitcoin swung wildly Thursday, rising to more than $19,000 only to fall sharply within minutes.
The frenzy surrounding the virtual currency escalated just days before it starts trading on a major U.S. exchange.
The frenzy even has parts of Wall Street concerned.
A group of banks complained that federal regulators approved Bitcoin futures, which began trading Sunday, too quickly and without properly considering the inherent risks in the virtual currency.
Around 10:40 a.m.
Pacific Time, 1 Bitcoin was valued at $15,872, according to Coinbase. It briefly surged above $19,000 earlier in the day.
Last week, the price of a Bitcoin topped $10,000 for the first time.
At the start of the year, it was worth less than $1,000.
Coinbase, the largest Bitcoin exchange, tweeted that record-high traffic had caused interruptions to its service Thursday.
The price swings are occurring not long before Bitcoin starts trading on two established U.S.
exchanges.
Futures for Bitcoin will start trading on the Chicago Board Options Exchange on Sunday evening and on the Chicago Mercantile Exchange a week later.
The Futures Industry Association, which represents Wall Street's biggest banks and clearinghouses, sent a letter to the Commodities Futures Trading Commission, saying that as the guarantors of customers' trades, they should have been consulted before trading in Bitcoin futures was approved.
They expressed concern that the extreme volatility tied into Bitcoin could leave banks exposed when the futures move too violently.
The price swings are occurring just as the trading community prepares for Bitcoin to start trading on two established U.S.
exchanges.
Futures for Bitcoin will start trading on the Chicago Board Options Exchange on Sunday evening and on crosstown rival CME Group's platforms later in the month.
That has increased the sense among some investors that Bitcoin is gaining in mainstream legitimacy after several countries, such as China, tried to stifle the virtual currency.
Bitcoin is the world's most popular virtual currency.
Such currencies are not tied to a bank or government and enable users to spend money anonymously.
They are basically lines of computer code that are digitally signed each time they are traded.
A debate is raging on the merits of such currencies. Some say they serve merely to facilitate money laundering and illicit, anonymous payments.
Others say they can be helpful methods of payment, such as in crisis situations where national currencies have collapsed.
Miners of Bitcoins and other virtual currencies help keep the systems honest by having their computers keep a global running tally of transactions. That prevents cheaters from spinning the same digital coin twice.
Meanwhile, There are fresh concerns about the security of Bitcoin and other virtual currencies after NiceHash, a company that mines Bitcoins on behalf of customers, said it is investigating a breach that may have resulted in the theft of about $70 million worth of Bitcoin.
Research company CoinDesk said a wallet address referred to by NiceHash users indicates that about 4,700 Bitcoins had been stolen.
NiceHash said it will stop operating for 24 hours while it verifies how many Bitcoins were taken.
Wallet is a nickname for an online account.
NiceHash did not respond to an emailed request for more details about its own breach.
The incident has been reported to the relevant authorities and law enforcement, and we are cooperating with them as a matter of urgency, it said in a statement, in which it also urged users to change their passwords.
Slovenian police are investigating the case together with authorities in other states, spokesman Boštjan Lindev said.
Lindev did not provide details.
In Japan, after the failure of a Bitcoin exchange called Mount.
Gox, laws were enacted to regulate Bitcoin and other virtual currencies.
Gox shut down in February 2014, saying it lost about 850,000 Bitcoins, possibly to hackers.
Bitcoin is a digital currency that is not tied to a bank or government and allows users to spend money anonymously.
The coins are created by users who mine them by lending computing power to verify other users' transactions.
They receive Bitcoins in exchange.
The coins also can be bought and sold on exchanges with US
dollars and other currencies.